Hi, friends. Our theme this week is one of reflection and transformation. In a world where economic rules are shifting fast, we're looking at how long-standing wealth-building strategies are re-emerging in unexpected forms. First, we explore the principles behind self-banking. This is an old idea with powerful modern relevance that has helped families build financial legacies for generations. Today, we can do it with the new assets. Then we dig into a little-known framework rumored to be behind some of the biggest global economic moves we're watching unfold today, the Mar-a-Lago Accord. These are my reflections on this economic blueprint. If you'd like to dig into the details more yourself, here is the prompt I used in perplexity.ai. What are the key bullets that make up the Mar-a-Lago Accord? And then continue asking questions from there. It is a fascinating study. Let's dig in. Investor journey. Self-banking in the 20th and 21st centuries. There's a quiet kind of power in being able to say, I've got this covered, not because someone else gave you permission, but because you created your own access to capital. That's what self-banking really is, building liquidity within your own control. For much of the 20th century, the tool of choice for this kind of strategy was a whole life insurance policy with paid-up additions, PUAs. It wasn't the kind of product you heard about on the news or in mainstream money talk. But behind the scenes, it was a core part of how many families quietly built and protected wealth. Here's how it works. You purchase a whole life policy through a mutual insurance company like Penn Mutual, which means the company is owned by its policyholders. Over time, the policy accumulates guaranteed cash value, which grows tax deferred. With PUAs, you contribute additional funds that increase both the cash value and the death benefit, accelerating the growth of your policy. As the cash value grows, you can borrow against it, often at low interest rates, without selling assets or triggering taxes. That loan doesn't need approval from a bank. It's backed by your policy with no repayment schedule unless you want one. This means your money keeps working inside the policy, even as you put it to work elsewhere. Now, in the 21st century, a similar dynamic is emerging with Bitcoin, not just as a speculative asset, but as a new form of financial sovereignty. Here's what that looks like. You acquire Bitcoin and self-custody IT, typically in cold storage, offline, which removes third-party risk. As your holdings grow in value, they become collateral you can borrow against using platforms that support Bitcoin-backed loans. These loans allow you to access liquidity without triggering a taxable event or selling your Bitcoin, preserving your long-term upside. Unlike traditional finance, there are no credit checks, income statements, or approval processes. It's purely asset-backed lending. In both cases, whether with a life insurance policy or digital assets, the core principle is the same. Build assets you control and learn to leverage them without giving up ownership. These aren't theories we're tossing around. These are tools we're actively using and discussing inside our Women's Wealthy Ways community. Whether you're curious about how to structure a life insurance policy for cash flow or how to build a Bitcoin position that gives you optionality, this is where the conversation happens. Join us if you'd like to learn more for including this strategy in your own portfolio. Is the Mar-a-Lago Accord a playbook? Friday, May 23rd, the markets opened to red again. This time, the spark was a sweeping 50% tariff on EU imports, an aggressive move that sent traders scrambling and headlines flying. But in our Women's Wealthy Ways call that morning, the question wasn't about the numbers. It was this: is there a bigger strategy behind the chaos? One theory gaining traction is that these moves follow a playbook known as the Mar-a-Lago Accord. It's not a signed treaty, but a strategic blueprint that appears to be driving trade policy, currency devaluation, and debt restructuring with one overarching goal: to reassert U.S. dominance in the global economic system. At first glance, it sounds like a bold plan to restore American strength. Strategic dollar devaluation, century bonds to lock in foreign held debt, capital controls to force domestic reinvestment, and a U.S. sovereign wealth fund to include gold and even Bitcoin. It's aggressive, unapologetic, and unapologetically disruptive. But as I reflect on the implications, the picture becomes more complex. If implemented all at once, the Accord's policies could shock the system, disrupting markets, triggering capital flight, and eroding confidence in U.S. assets. That kind of disruption might be necessary to reset the game, but it also risks destabilizing the very system it claims to preserve. If rolled out slowly, the changes may feel less threatening, but they also lose some of their force. Investors and foreign governments may adjust in advance, undermining the intended effects. Gradualism buys time, but it also gives opposition time to organize. It occurs to me that what makes this framework powerful is also what makes it dangerous. The U.S. is essentially betting that the rest of the world still needs the dollar and American security enough to tolerate this kind of economic coercion. That's a high-stakes wager in a world increasingly looking for alternatives. But maybe a bigger question, what is the end game? Is the Mar-a-Lago Accord an effort to reclaim American autonomy by unwinding decades of dependence on foreign capital, bring manufacturing home, and prepare for a post-dollar world? Or is it something else? Perhaps a controlled demolition of the current system to clear the path for a new kind of global regime, built not on open markets and sovereign nations, but on centralized control, digital assets, and AI-administered systems that erase the very autonomy it pretends to preserve. As I reflect on the speed, scope, and secrecy behind these proposals, I can't help but wonder whether this is about saving American sovereignty or preparing for its managed collapse. After all, history tells us that sweeping transitions often consolidate power, not return it to the people. What's clear is that these aren't just economic tools. They're signals that the old model is being replaced quietly, urgently, and without broad public debate. So the question isn't just whether the Mar-a-Lago Accord will succeed, it's what kind of future it's setting in motion and how we, as thoughtful investors and citizens, can prepare for whatever comes next. Investor Skills Corner. This issue's glossary highlights some of the concepts and terms referenced in this newsletter. 1. Paid-up additions, APUAs, additional contributions to a whole life insurance policy that buy extra coverage and grow the policy's cash value faster. PUAs supercharge the policy's growth and increase the amount you can borrow against without additional underwriting. 2. Self-banking, a strategy where you build assets like cash value in insurance or Bitcoin that you can borrow against. The goal is to create liquidity on your own terms without needing approval from a bank or triggering taxes from asset sales. 3. Cold storage for Bitcoin, a method of storing Bitcoin offline, usually on a hardware wallet. This reduces the risk of hacking or exchange failure and gives you full control over your digital assets. 4th century bonds, U.S. government bonds with a 100-year maturity. These are being proposed as part of the Mar-a-Lago Accord to restructure debt by locking in long-term borrowing at low or no interest, essentially kicking the debt can far down the road. 5th, dollar devaluation, a deliberate policy to reduce the value of the U.S. dollar, making exports cheaper and imports more expensive. 6th, sovereign wealth fund, a government-owned investment fund, giving the country a way to hold diversified assets like a private investor. 7, asset-backed lending, borrowing money using an asset as collateral. There are no credit checks or approvals, just access to liquidity based on what you already own. 8. Reserve currency, the primary currency used in global trade and finance. Right now, that's the US dollar. But some strategies in the Mar-a-Lago Accord could either protect or weaken that status on how they're managed.